Hi, this is Shupriyo. So in this video, we are going to cover all the RBI current affairs of February 2020. So I will be covering all the important RBI news items that have come up in the month of February, and it will be a comprehensive coverage. So I hope that you have already watched my video on the December 2019 and the January 2020 RBI news. So all the RBI current affairs of those 2 months I have already covered, and in this video we are going to cover the February 2020 current affairs. My objective is to cover it very comprehensively, so I will be going into the nitty-gritty and all the important details. So this will be very useful for the RBI Grade B examinees and also for the SEBI Grade A aspirants. So I hope that all of you derive a lot of value from this video, and if you are new here, please consider subscribing. Hit that subscribe button and the bell notification as well, so that you can get all of my latest notifications. Let's go ahead and start the video. So this video is going to cover the RBI current affairs, or the general awareness focused only on the RBI, the Reserve Bank of India, for the month of February 2020. We are going to follow in the same pattern that we had done for the December and the January months. So I hope that you have watched that video, because I am going to follow the same pattern. I'll give you the news, I'll also tell you about the subtle things and explain you about some concepts that you can use while you are preparing for this examination. So let's begin. Number 1, RBI conducts the 6th Monetary Policy Committee MPC meeting on February 6, 2020. So this was the 6th Monetary Policy Committee meeting, and remember that it was the 6th MPC meeting of 2019-20. So we had the 7th one very recently. So we have finished all with the 2019-20 year, and I have created an entire video which is solely focused on the 6th MPC committee meeting. So I have discussed the PDF and all the important things I have covered there. So make sure that you go watch that, because it has a lot of important things that you need to cover if you are preparing for RBI Grade B and such types of examinations. And here I have just tried to give you a brief overview, because I have already explained everything in that video. So I'll give you just a brief overview. So the repo rate, it was unchanged at 5.15%. The reverse repo rate was unchanged at 4.90%. Of course, right now the repo rate has been slashed even further. So right now it stands at 4.4% because of the coronavirus and the economic slowdown. RBI was forced to reduce it, and the reverse repo right now stands at 4%. But that is the latest development. So this is just the previous one. So you do not need to memorize all of the percentages here. You just need to memorize the latest ones. So once I cover the March current affairs of RBI, I'll tell you all about those current ratios. And so let's move to the GDP growth forecast. So for the financial year 2020-21, it was projected at 6%, and the GDP growth for 2019-20, it was seen at 5%. So these are the important figures, and also the estimates for FY 2020, it was at 6.5%, and for Q3 it was at 3.2%. This was the CPI, the consumer price index. So this is the retail inflation, you can say. So that inflation forecast, it was at 6.5% for FY 2020 entire thing, and for quarter 3 it stood at 3.2%, and the bank rate and the marginal standing facility, it was at 5.4%. So as I mentioned, all of these percentages, these are all changed, so no need to memorize all of these things. We will cover everything in the March 2020 RBI current affairs. So let's move to the next one, number 2. RBI guidelines on merchant acquiring business for regional rural banks, RRBs. So this is very important, because in the 6th MPC meeting, the RRBs, they were allowed to act as merchant acquiring banks using the Aadhaar Pay, the BHIM app, and the point of sale terminals. So right now the regional rural banks, they can act as merchant acquiring banks. So they can go ahead and just go ahead into this business. And the RRBs, if they want to do this, they should have acquired permission for mobile banking from the RBI. So only the RRBs who have acquired this permission of mobile banking, they can go ahead and they can get this license for the merchant acquiring business. Some other clauses now. So the IS audit, the information security audit of the bank's IT systems or the CBS systems must have been done within 6 months of the application. So before application, 6 months at least before that term, they should have had IS audit done, and the customer grievance redressal mechanism and security infrastructure should also be in place before they are permitted to get into this business. And the board approved policy on merchant acquisition for card transactions should also be there. So the board must have approved that policy. And importantly, RBI should not have imposed any restrictions on deposits or withdrawals. We have seen that sometimes the RBI will go ahead and impose restrictions. So if any bank has those restrictions, they cannot go into this business. And this is another thing, that to deploy their own devices, the RRBs must have, in the preceding financial year, they must have a net worth which is equal to or greater than 100 crore rupees as on March 31st of the preceding financial year, the last financial year. They should also have a minimum capital to risk weighted assets ratio of 9%, and the net NPA should be below 5%. So all of these things must be in place before they are allowed to deploy their own devices. So that's all about the merchant acquiring business if the RRBs want to go into it. Let's move to item number 3. RBI's new asset recognition norms for deferment of DCCO for the commercial real estate sector projects, CRE projects. So what is the DCCO? DCCO, very important. It is the date of commencement of commercial operations. So it is the date on which the commercial operations have been commenced. So what has the RBI mentioned regarding this? They have mentioned that if the DCCO date is revised and repayment schedule is shifted for equal or shorter duration, it won't be classified as restructuring. If the date is shifted, it won't be classified as restructuring if those conditions are met. So conditions that revised DCCO is within 1 year from original DCCO stipulated during financial closure for the CRE projects. So when the CRE projects had financially closed, when all the funding was secured, the DCCO that had been stipulated at that point of time, the date of commencement, if it was revised within 1 year, so 1 year leeway has been given. And also another thing is, all other terms and conditions of the loan have to remain unchanged. So these are the two important things. If these two important things are holding, then you do not need to classify it as restructuring. So the standard asset category it can maintain. It will not go into any other asset classification. It's a very important and a great relief for the CRE projects. And if the CRE projects are delayed for reasons beyond the control of the promoters, very important, beyond the control of the promoters, banks may restructure them by revising DCCO by another 1 year. So 1 year it was already allowed, and they can go ahead and revise it by another year if there are reasons which are beyond the control of the promoters. Very important. So now we get 2 years of relaxation, and still retain standard asset classification if the account continues to be serviced as per the revised terms and condition under restructuring. So this is a very important thing, because the CRE projects, they were actually struggling to take off. So RBI saw that struggle, and they have tried to just give a leeway for them so that they can resume operations. And so let's move to number 4. Exemption from CRR, cash reserve ratio maintenance, to incentivize bank credit to specific sectors. Now this is also something that was mentioned in the 6th MPC meeting 2019-20. I'll again repeat that I have covered all of these things, so go check that out, the video, if you want the comprehensive coverage. So the CRR maintenance which was mentioned in that MPC meeting, now the RBI has come out with some norms. So the banks, they are allowed to deduct the amount of incremental credit disbursed as retail loans to which sectors? Automobile sector, residential housing sector, and loans to MSMEs over and above the outstanding level of credit to these segments as at the end of the fortnight ended January 31st, 2020. So at the end of the fortnight, January 31st, 2020, they had given a certain quantum of loan, right? So after that, whatever incremental credit, see, incremental credit, whatever they are giving, after that, that will be deducted from the CRR maintenance requirement. This is a huge deal first time that RBI has given such a new thing of the CRR maintenance. Usually it's not the first time, of course they gave it during the demonetization and also for the other some historical times they had given it, but this is a very important time because we are having an economic slowdown, so some sectors need to be revived, and that is why they can deduct that incremental credit from their NDTL for the maintenance of the CRR. So that incremental loan whatever they give, they can deduct it from their NDTL. It's a very important CRR announcement, and first such deduction will be allowed from the NDTL of February 14, 2020. So you can say that it's kind of a Valentine's Day gift for the banks by the RBI. So of course they did not ask whether they want to be the Valentine, but they just gave ahead a gift, and the banks will really be happy to receive this gift actually. And it will be allowed up to fortnight ending July 31st, 2020. So the fortnight ending July 31st, they are allowed till then, and this amount is eligible for deduction from NDTL for computing CRR for 5 years from the date of origination of the loan or the tenure of the loan, whichever is earlier. So of course, because you have to give them some time till which they can deduct from the NDTL. So this is the important development regarding cash reserve ratio, and I hope that you have noted everything. So if you face any problems, you are unable to understand anything, feel free to write down in the comments below. I'll help you out. Let's move to the next one. Number 5. RBI allows restructuring of advances to micro, small and medium enterprises, MSMEs. So this had actually been done, the one-time restructuring. This was actually earlier allowed. So earlier what they had allowed, that existing loans to MSMEs classified as standard without a downgrade in the asset qualification. So they would be classified as standard if aggregate exposure of banks or NBFCs to the borrower is less than rupees 25 crore as on 1st January 2020. So aggregate exposure includes all the non-fund based facilities as well. It has to be below 25 crore, and the borrower's account was in default but was a standard asset as on January 1, 2020 and continues to be standard asset till the date of implementation of the restructuring. Also, the restructuring of the borrower account is implemented on or before December 31st, 2020. So these are the three important conditions for which they can allow it, and also fourth condition is there, that the borrowing entity is GST registered or it is exempt from GST registration. So as we know that some entities are exempt from the registration, so those entities, they do not need to worry about it. So these four conditions must be met, and then if they are met without a downgrade in the asset classification, RBI will allow those existing MSME loans to continue as standard assets. So this is also a big relief to the banks and also to the MSME sector as a whole. So let's move to number 6. RBI notified Exim Bank's Government of India supported LOC line of credit to Suriname. So Exim Bank, as I told you in the last video that we made on the RBI current affairs, that Exim Bank usually has these LOCs and they always try and increase the soft power of India, and they also have a push towards the Indian exports because a percentage of that is met by the Indian exports. So Exim Bank has entered into an agreement with Government of Republic of Suriname for a Government of India supported LOC line of credit of $11.13 million. This is very important. It is for the purpose of financing rehabilitation and upgradation of De Melken Centrale NV milk processing plant in the Republic of Suriname. At least 75% of the contract price shall be supplied by the seller from India. So as I told you, seller from India has to export 75% and remaining 25% can be outside of India. Very important. So let's move to item number 7. Short-term crop loans eligible for interest subvention scheme ISS and prompt repayment incentive only via KCC. So the Ministry of Agriculture and Farmers Welfare intimated through RBI that short-term crop loans eligible for ISS and PRI should be extended only through KCC. So only through KCC they can be extended. The Kisan Credit Card, and this will be effective from April 1, 2020. Remember this date. So after March 31st, 2020, reimbursement of interest subvention for short-term crop loans only through non-KCC accounts will not be allowed. allowed. So all of these short-term crop loans, they must be made into Kisan Credit Card or the KCC scheme, and only then the government will allow the interest subvention. So as we know, there is an interest subvention of 3% for the prompt repayment by the farmers. So that is the scheme that we are talking about over here. So prompt repayment incentive, PRI, or the interest subvention scheme, which is the ISS. So very important. Let's move to item number 8. RBI norms for external benchmark based lending with reference to medium enterprises. So all new floating rate personal or retail loans, the housing, auto, etc., and the floating rate loans to micro and small enterprises extended by banks with effect from October 1st, 2019 were linked to external benchmarks. So all of these loans, the housing, the auto, the micro and the small enterprises, all the floating rate loans of those sectors were already linked to the external benchmarks. Now after they had linked it, what did the RBI see? The RBI saw very positive developments. They saw that after introducing it, monetary policy transmission improved in those loans linked to the external benchmarks. So the transmission of the monetary policy, which is a big headache for the RBI, it has improved. And so since the RBI saw this positive development, they now said that to further strengthen MP transmission, all new floating rate loans to the medium enterprises from 1st April 2020 will also be linked to the external benchmarks. So now the medium enterprises, all those loans are also going to be linked to the external benchmarks. Now who does this apply to? This applies to all the scheduled commercial banks excluding the RRBs, and it applies to the small finance banks and also the local area banks. So all of these banks, they are going to affect it immediately. Let's move to number 9. RBI assigns lead bank responsibility in the newly formed districts of Tamil Nadu. So 5 new districts have been formed in Tamil Nadu, and RBI assigned lead bank responsibility for each of these new districts. So I'll just blow up this image. As you can see that there are 5 districts that have been formed, and all the this column is very important, the lead bank responsibility assigned to. So just remember who was assigned the lead bank responsibility, and as you can see, all of them were given to Indian Bank. Only one, which is the Tenkasi Kav district, which was in the erstwhile district of Tirunelveli, this was given to the Indian Overseas Bank. Rest of them are all for Indian Bank. So very easy to remember. Now the lead bank scheme, so just have a little bit idea about this scheme. It was introduced in 1969 and it was based on the recommendations of the Gadgil study group. So very important. Let's move to the next item. RBI conducts Financial Literacy Week. So each and every year we have the FLW, or the Financial Literacy Week, and RBI conducted it in 2020 as well, from February 10 to February 14, 2020, and the theme was Micro, Small and Medium Enterprises, MSMEs. It was conducted every year since 2016, so very important, remember this. And the focus of the MSME theme, this will be on creating awareness about aspects relating to formalization, collateral free loan, discounting of receivables, rehabilitation of stressed units and timely repayment. So all of these aspects the MSME theme is going to focus on. So that's all about the Financial Literacy Week. Let's move to the next item. RBI will release Digital Payment Index by July 2020. So they are going to release this new DPI, Digital Payment Index, very important. Main aim of the index, it is to capture the extent of digitization of monetary payments in the country, and they are going to introduce it via various classifications. So classifications will be rural, urban and semi-urban geographies. So 3 different geographies are going to be covered. It will be a multi-parameter and reflect accurately both the penetration and deepening of various digital payment modes, and DPI will of course be a push towards Digital India. So just make a note of it. Let's move to number 12. So DIGC insurance coverage has been increased to 5 lakhs per bank. Now very important, this was mentioned actually in the budget 2020, and I have an entire playlist about the budget 2020, so I'll leave the link up top. I have covered each and every single thing about the budget. I have gone through the budget speech PDF and I have given you all the important things, so go check it out if you want. So this is just one part of the budget announcement, and it was increased to 5 lakh with effect from February 4, 2020. So all the insured banks, they are going to be covered. And very important that this premium, so who pays the premium? Because any insurance has a premium, right? So the premium is not paid by you or me. It is going to be paid only by the banks. The banks only pay it. So RBI will increase the premium by 2 paisa actually. So right now it is 10 paisa per 100 rupees, and now they are going to increase it to 12 paisa per 100 rupees. So there will be only a minor balance sheet effect. So the balance sheet of the banks is not going to be affected too much, and it was announced in budget 2020, as I told you. So DICGC, it is a wholly owned subsidiary of the RBI. So RBI right now has 4 important subsidiaries, wholly owned subsidiaries. So there are BRBN MPL, REBIT and IFTS. So without checking Google, can you tell me the full forms of each of these 3? So DICGC, I already told you, Deposit Insurance Credit Guarantee Corporation of India. So let me know in the comments down below if you know the full forms of the other 3. And so it was established on 15 July 1978 under the Deposit Insurance and Credit Guarantee Corporation Act 1961. So very important, remember to read about the DICGC very well, because this year there is going to be a lot of focus on it because the limit has been changed, right? So let's move to the next number, 13. PMC Bank case, RBI moves Supreme Court against Bombay High Court order to sell HDIL assets. So nearly 2/3 of the PMC Bank's total loan book is exposed to the bankrupt HDIL, Housing Development and Infrastructure Limited. So the Bombay High Court, they had actually received a public interest litigation, PIL, and it was filed by the depositors of PMC Bank. So after they received it, they just determined that an asset sale is required. So they told that you can go ahead and sell the HDIL assets and you can use that money to pay back the depositors. But RBI is very scared about this, because if that is done, then if the asset sale is done for the HDIL, it would dent its attempts to revive the PMC Bank in the wake of the 6,500 crore fraud. So the Punjab and Maharashtra Cooperative Bank, as you know, they have committed a huge fraud against the depositors, and that is why RBI fears that if such a asset sale is going on, then it will be a very difficult thing to resolve it once and for all the benefit of all the depositors. So that's why they have moved the Supreme Court, and right now the latest development is that the Supreme Court has stayed this asset sale. So it's ruled in favor of the RBI. Let's move to item number 14. To avoid more PMC-like crises, Cabinet amends Banking Regulation Act to give more powers to RBI. So the Banking Regulation Act of 1949, it was amended to give RBI greater control over cooperative banks in order to prevent malpractices and ensure better regulation. So cooperative banks will get access to better capital as well through this. And so what does it actually fix? It fixes issues with the dual regulation. So there is a dual regulation. One is RBI. The second is the Registrar of Cooperative Societies, which is from the Cooperative Societies Act to 1912. So this Registrar of Cooperative Societies, this looks into the administrative aspects, and right now also they are going to look into the administrative aspects, but the RBI regulation, the ability of RBI to supervise those banks and regulate those banks has now been quite improved by this latest amendment, and it will apply to 2 categories: urban cooperative banks, which is the UCBs, and we talked about this UCBs. A lot of focus is being paid on those UCBs right now because of the loopholes that used to exist, and multi-state cooperative banks. So these 2 categories, they are going to be regulated via this amendment, and audits will be as per the RBI guidelines. The RBI can quickly supersede the cooperative bank, and after consulting with the state government. So this is also something that has been improved. So let's move to number 15 now. RBI places restrictions on Sri Guru Raghavendra Sahakara Bank. So this is a bank from Karnataka, and the withdrawal limit has been reduced to 35,000. So the Bengaluru-based private lender cannot issue new loans or make any new investments without prior approval from RBI for the next 6 months. The case has also been registered on the ex-CEO Manur Vasudeva Maya, and the crisis due to the huge NPAs and lending money illegally to certain parties. So this is the reason of the crisis. This is not a very important news, but just make a note of it, especially if you are from Karnataka. So let's move to item number 16. RBI proposes draft rules to set up alternative retail payment system. So this is a very important thing, and in the coming months you are going to hear a lot more about this news. So they are going to create a new umbrella entity, NUE, focused on retail payment system along the lines of National Payments Corporation of India, NPCI. It will be incorporated as a company under the Companies Act 2013 with a minimum paid up capital of 500 crore rupees. Very, very important. No single promoter or promoter group will hold greater than 40% investment in the capital, and a minimum net worth of 300 crore rupees shall be maintained at all times. So these are the important things that you need to remember regarding this alternative retail payment system. And the NUE, it will encompass the management of ATMs, white label point of sale, the Aadhaar based payment services, and also other retail payments. So all of the retail payments, it will come under this umbrella organization. It will be quite similar to the NPCI. So we are going to hear more about it once it is set up. So let's move to number 17. RBI approved the appointment of MD and CEO of Dhanlaxmi Bank. So Sunil Garbakshani, we had already talked about this in one of the current affairs videos. He has been appointed as the Managing Director and the Chief Executive Officer of Dhanlaxmi Bank, and also approved by the RBI. His tenure is going to be 3 years, and he is earlier the Dhanlaxmi Bank was in the RBI's PCA framework, the Prompt Corrective Action framework, but now it has been cleared. So let's move to number 18. RBI proposes to sync its financial year with the fiscal year. So back in February, this was just a proposal, but very recently this has been given the go ahead, and right now RBI has actually done it. So they have actually gone ahead and synced. So who had actually recommended it? It was recommended by an expert committee led by the former governor Biman Jalan. So very important, remember this name. And they are going to sync this accounting year with the central government with effect from 2020-21. Actually, from 2021 we are going to have the full sync. So right now we have the accounting year of the RBI as July 1 to June 30 every year, right? And this year they have told that it will be from July 1 2020 to March 31st 2021. So March 31st 2021, and from April 1 2021 they are going to end on March 31st 2022. So it is going to sync with the fiscal year, and it will help to better provide estimates of surplus transfer to the government. So the estimates of the surplus transfer, right now there are a lot of complicated calculations involved, because RBI is following from July to June and government is following from April to March. So a lot of conflicts happen, and this will actually reduce the need for the interim dividend. We keep hearing about the interim dividend. It is not going to be required except for some exceptional cases right now, and it will help the monetary policy projections and reports as well. So many things will be benefited by RBI doing this, and this alignment, remember, it will change the 8-decade practice of RBI. So over 80 years we have been following this thing. Let's move to number 19. RBI removes restrictions on Bunsen Bank and allows it to open new branches. Very, very important. Bunsen Bank, they were actually having a lot of contention with the RBI regarding the promoter shareholding. So in September 2018, RBI had prohibited them from opening new branches without prior approval. So prior approval they needed to take before they could open new branches. Why they had done it? Because bank's promoter Bandhan Financial Holdings Limited had not diluted its stake. So they needed to dilute the stake to 40% within 3 years of starting the business. So when was this deadline? This deadline was of 23rd August 2020. So right now the dilution is still incomplete, but they are on track to meet the stake dilution, and so RBI has allowed it to open new branches right now without approval, but 25% of the new banking outlets must be opened in unbanked rural centers. So this is per financial year. So in each financial year, the number of banking outlets that you open, 25% must be in unbanked rural centers. So very important development regarding Bandhan Bank. And also remember something, that many analysts were very worried about the Bandhan Bank's ability to actually service its loans and everything because of the northeast disturbances that were happening because of the NRC and the CAA. So right now Bandhan Bank has assured the investors that everything is fine and business will continue as usual. So let's move to number 20. RBI approves appointment of of IndusInd Bank CEO for 3 years. So who is the new managing director and CEO of IndusInd Bank? It is Sumant Katpalia. Very important name. Previous CEO Ramesh Sopti, he had expected actually that RBI would extend the age limit for managing directors of private sector banks from 70 to 75 years. So expectation was that, but RBI they had turned them down. And just remember that under Companies Act, registered companies can have chief executives aged greater than 70 years by passing a special resolution. So this is just extra information. Main is the name that you need to remember. Let's move to point number 21. IDBI Bank, UCO Bank and Central Bank seek RBI nod to exit the PCA framework. So they want to exit the prompt corrective action framework. So these three banks, they were placed under the PCA framework, which puts partial restrictions on loan disbursements after a massive asset quality deterioration, losses in the books and lower capital levels. So the CRAR was reduced, the NNPA, the net NPA had actually increased a lot, and that is why massive asset quality had deteriorated. Now most of them are actually coming back. That is why they are seeking to get out of the PCA framework, because there are a lot of restrictions in the PCA framework that we know. So IDBI Bank, which is now owned by LIC, has met all but one criteria. Only the ROA was negative at minus 7.63 for the quarter ended December 2019. So very soon they are going to come out of the PCA framework. Let's move to number 22. RBI governor mentioned that government securities will soon be included in global indices. This is a very important thing, because if it is successful, then we will be attracting higher foreign flows, as many overseas funds are mandated to track the global indices. So because they will be mandated, they have to pour in some money and they have to track our indices as well. So crowding out effect of domestic capital will be reduced and would reach required industries. So what will happen if a lot of foreign money comes in? The domestic money, it doesn't need to go, it doesn't need to fulfill all of the needs, right? So the domestic money can be channelized into the right industries. That is what RBI is hoping. And in this year's budget as well, so again I have covered all of this in my budget video, go check it out if you want. So the finance minister opened certain categories of G-Secs for foreign investors. So some non-resident, you will remember that some G-Secs, it had been opened fully for the non-resident investors, and globally large institutional investors track these global indices like Bloomberg Barclays Emerging Market Bond Index. So remember this name, this is just one name. So these kinds of large institutional investors, they just track these global indices. So if we become a global index, then it will help us, and so the G-Sec industry will have a huge push in India. And for positional decisions on sovereign papers, very important. So why do they do this tracking? Because of the positional decisions. So sometimes some big companies, they want to maintain some positions in different indexes, and according to the different performance of the countries, they will change these positions. So very interesting investment decisions are made based on these, and we will actually benefit a lot if we become a global index. So let's move to number 23. RBI gives final nod to Kotak's plan for diluting promoter shareholding. Again, this Kotak Mahindra Bank contention issue had happened, and it was running for a long time. So what had happened was that Uday Kotak, he wanted to issue PNCPS, which is perpetual non-cumulative preference shares. So he wanted to just issue these things, and he wanted to dilute his stake. But because he was doing this, the RBI told that no, you cannot do it, because if you do that, you are going to dilute your stake, but your voting power is going to remain. So he wanted to have more control. So there was a lot of just tussle between RBI and Kotak Bank, and the bank had actually had a writ petition in the Bombay High Court. So right now everything is cleared. RBI has agreed to its proposal to reduce promoter stake from to 26% from the current 29.96% over the next 6 months. So remember these two numbers, very important. Promoter voting rights will be capped at 20% of the paid up voting share capital until 31st March, and will be further capped at 15% effective 1st April. So this is the gradual lowering of the voting rights. So this is very important to note the percentages. Promoter Uday Kotak will now sell 4% of his stake worth 12,500 crore rupees over the next 6 months. So over the next 6 months, it's going to be fully effective. So finally, Kotak Mahindra Bank has just withdrawn its writ petition in the Bombay High Court, because all the contentious issues have now been sorted. So it's a great relief to the bank and to the RBI as well. So let's move to the last item for today. It is Finance Ministry will print new 1 rupee notes very soon. So remember that this news, it is not RBI current affairs per se. However, RBI, there is a lot of linkage between this, because 1 rupee notes, it is always printed by the government of India, and they need to notify the RBI because the total quantum of the money in the system is actually measured by the RBI. So Ministry of Finance notified printing of 1 rupee currency notes rules 2020 via their Gazette notification GSR 95E dated February 7, 2020. The new 1 rupee notes will have the bilingual signature of Atanu Chakravarti, who is the Secretary of the Ministry of Finance. Very, very important. The Finance Secretary's signature is always on the 1 rupee note. Remember this. It is not the sign of the governor. Remember, other notes will bear the sign of the governor of RBI, but this note, it will bear the signature of Atanu Chakravarti, who is right now the finance secretary. Always the finance secretary has to sign. And the rupee symbol will have a design of grains which depicts the agricultural dominance of India, and surrounding design has the picture of Sagar Samrat oil exploration platform with authentic rendering of value in the 15 Indian languages. So these are the specifics that you need to note, and the predominantly it will be pink green color amongst other colors. There will be also multi-tonal watermarks for further security features. So this is the important news regarding the new 1 rupee notes. So we have come to the end of our session on the RBI current affairs or the general awareness of RBI for the month of February 2020. I hope that you are enjoying this series. So I have covered January, I have covered December and also February right now. So we will be soon covering the March one. So please subscribe for that if you want to see that, and please leave a like on this video if you enjoyed. Please let me know in the comments below if I can improve it further, and I hope that you have learned something from this video and that it was beneficial to you. I'll see you in the next one. Bye bye.